Hello and welcome to this YouTube channel for ACCA FR exam prep. My name is Adam. In this video, I'll be taking you through how we account for the impairment of a single asset. Now let's look at the question. The requirement. What amount will be charged to profit or loss for the impairment of these assets for the year ended 30th September 2014. Riley acquired a non-current asset on 1st October 2009 at a cost of $100,000, which had a useful life of 10 years, so 10 years, and a new residual value. The asset had been currently depreciated up to 30th September 2014. At that date, the asset was damaged and an impairment review was performed. On 30th September 2014, the fair value of the asset less cost to sell was $30,000, that is net realizable value. And the expected future cash flows were $8,500 per annum for the next 5 years. Now, the current cost of capital 10% and a 5-year annuity of $1 per annum at 10% would have a present value of this. So straight away know that your value in use, which is the present value of the cash flows, should be 8,500 times the annuity factor. So let's check on that. 8,500 times 3.79. That is 32,215. Now, in determining the impairment, we have to look at the carrying amount at 30th September 2014. And this should be the cost, which is 100,000, less accumulated depreciation. And what's that accumulated depreciation? It is the 100,000 divided by the number of years, which is 10, times the number of years up to date. And how do we find that number of years up to date? Let's see. The number of years up to date would be from 1st October 2009 to 30th September 2014. And this is how I'll count it. It means that the first year end would be 30th September 2010. So it means that I would have 2010, 2011, 2012, 2013, and 2014. So 1, 2, 3, 4, 5. So this is 5 years. So it is 5 years as at the current reporting date. So we need 5 years accumulated depreciation. So the 100,000 divided by 10 times 5 should give us the accumulated depreciation. So therefore, the current amount would be half of the total cost, and that clearly is 50,000. Now, in determining impairment, we say that an asset is impaired if its carrying amount exceeds the recoverable amount. Now, what is the recoverable amount? The recoverable amount, we say, is the higher of the net realizable value and the value in use. Now, looking at these two values, the net realizable value is 30,000. The value in use is 32,215. So this is therefore the recoverable amount. So let's take it down there because it's multiple choice. So the recoverable amount is 32,215. Therefore, the impairment is equal to 50,000 minus 32 minus 32,215, and that should be a straightforward calculation on your calculator. And this is 17,785. So let's see which option will give us that answer, and this is option A. So look at it, look at what we have done. Impairment, we say that the assets carried amount exceeds the recoverable amount. And most importantly, how do we determine the recoverable amount? Look at the value for the net realizable value, and also the value for the value in use, which is the present value of the future cash flows the asset will generate. So the higher figure should give you the recoverable amount. And when you compare that to the carried amount, you determine the impairment. So the impairment loss arising on this asset is 17,785. I hope this helps in your preparation for the FR exam. Please subscribe to this channel to receive updates on new videos.